So earlier on Thursday, Harry Markopolos, who is the Bernie Madoff whistleblower, I talked about him on the live stream show earlier today. His great book, No One Would Listen, he details in grave detail, really. It's an excellent book. It's a thriller. It also shows how sad American society is deteriorating in terms of its justice system, in terms of its regulators, etc. And he just dropped a 175-page, and it took his certified fraud himself and his certified fraud examiners 7.5 months, I think, about, to detail basically egregious amounts of accounting fraud and insurance fraud allegations against General Electric. So General Electric, if you're not familiar with the company, the share price on this news, the share price is down 11%, down to around $8, a little above $8. The shares had already been in trouble last year, in November and December, when GE had a drop in revenues and they got their credit rating downgraded. And I was talking about General Electric back then, saying that it was a ticking time bomb. Danielle DiMartino Booth was as well. But I was warning people that, management would try to do stuff, that management would try to say that the company was better. They brought in a new CEO. They sold some assets. I believe recently they just sold GE Biopharma. And predictably, well, actually, what I want to say is that this is actually very predictable, what happened to GE and their past. Originally, General Electric was one of the greatest companies in American history. They did an enormous amount of innovation. They actually manufactured real stuff. Thomas Edison, the founder, he did the initially it was direct current. He was incorrect. And Nikola Tesla was about alternating current. And then he did screw up Nikola Tesla's life, but he built General Electric, the company, and General Electric had many wins and many successes. But over the last couple decades, things were unraveling at General Electric, but a lot of people did not even notice it. That's the sad part. A lot of people did not notice it. So I put out a tweet summarizing, first of all, General Electric for decades now participated in every single fad. So all the fads, General Electric, Peter Lynch would have called this deworsification. So General Electric became this deworsified conglomerate. They bought a television, they bought a movie studio, they bought a television studio. They were buying a bunch of things that they really had no idea what they were doing, just because they had an enormous market cap of well over $100 billion, enormous dividends. Everyone respected the company. A lot of people thought that they were America's best company. So they took advantage of that brand. They used to manufacture stuff. People used to recognize light bulbs were made by GE. GE made the best appliances. GE made the best refrigerators, dishwashers, jet engines, all these things, locomotives. And over the last couple decades, GE has not gone that way. GE went the diversification route, like I said, and they bought a television studio and all this other stuff that was making a profit, but it was very inefficient the way they were trying to run things. And, those in the 1980s, this was very, very common, all adding up all those conglomerates there that own businesses and all these other industries. And GE was copying that. And then recently, GE got into biopharma and a bunch of other stuff. They sold that business too. And I think GE also got into, I didn't even know this until today, GE got into insurance. I had no idea GE was in insurance. We all know about GE Capital. GE Capital was, also that the other major thing as part of this diversification is GE found out that instead of actually making stuff, that GE could make even better margins acting like a Wall Street bank. So GE Capital was a disaster. For a while, it made a lot of profits. It took on a bunch of liabilities and leverage. And in 2008, the thing was just hemorrhaging and it was a disaster. And it basically bankrupted GE, except Warren Buffett and the U.S. government stepped in. And GE Capital, I think, was recently sold. So GE has made a lot of mistakes for a while now. Yeah, I think that's a good point about Edison, but Edison's gotten a lot of the credit. I mean, if he would have had a better working relationship with Nikola Tesla and not let their egos get in the way and try to ruin Tesla. Imagine the good and the innovations that they could have done together instead of Tesla's life being destroyed and, all the bad things that happened to Tesla. Anyways, though, General Electric, the company, was extremely well respected, and they took advantage of this for decades, and they just kept leveraging the balance sheet. So Harry Markopolos did a bunch of interviews today. He was on Yahoo Finance, CNBC. There's links to all of his interviews, at least 2 or 3 of them in the Zero Hedge article that's out. But General Electric, though, it seems that they got into this insurance business and they were collecting insurance premiums and not setting aside reserves. They've had problems that people have been telling me about for a long time with their pension fund, that a lot of the employee pension fund for General Electric is employee shares. Is shares of General Electric. They have one of the highest percentages of non-diversified pension funds. So that's a disaster. And, GE now, with the 175-page report, General Electric obviously is denying this. They're calling it misleading and inflammatory and market manipulation. But General Electric, really, they've gotten fined. Remember I interviewed Francine McKenna? I just remember this right now. I interviewed Francine McKenna, I think either at the end of last year or early this year, and she was saying how most people are unaware of this, but buried deep in the General Electric annual reports for years that they've been paying big SEC fines for very aggressive accounting or accounting fraud. So they're lawyers, they're army of lawyers, and this is why GE is a very good example of the bad things about corporate America and how a small government can turn into a big government and bad things happen, and how a innovative corporation with financialization, too much debt on the balance sheet, financial engineering, bad acquisitions, too much debt, etc. All those things then can just spiral out of control for General Electric. And this is where General Electric finds itself now, because they were desperate to keep the stock price from crashing, and it looks like a bunch of games were played. So GE played this is a tweet I put out. GE played the lobbying, government contracts, government subsidy, and tax loophole game way too aggressively for a very long time, in addition to leveraging up their balance sheet with too many billions in debt for leverage buyouts, LBOs, bad acquisitions. And Harry Markopolos says that they're going to have to write off about $40 billion in bad acquisitions. In addition to that, they don't have enough reserves for their insurance business. So they've been collecting some insurance premiums, but their liabilities, the insurance that they're going to have to pay out, is nowhere near the amount that they've collected in premiums. So this was predictable, that GE would get into problems, or that they would do accounting fraud, or their main problem when I talked about GE last in November, December was debt. Okay, because they had done way too much financial engineering and they had loaded the balance sheet with debt. The credit downgrade really, really hurt them. They were one of the ones that Danielle DiMartino Booth was talking about that was, trying really, really hard, harassing basically the credit ratings agencies to not downgrade them on a daily basis. And it looks like the fraud at General Electric started a long time ago, and it's just snowballed. So General Electric, if you're not familiar with their history, they were not paying taxes. There was a story that came out, I think in 2008 or 2009, 2010, somewhere in that range. And it was that General Electric had such a large army of lobbyists, of tax attorneys, and like the best wizard, the financial accountants, the best accountants, that they had managed to, even though they had many, many billions in corporate profits, they had managed to not pay, I think, even $1 in corporate taxes to the government, and they actually got billions of dollars back in subsidies. So General Electric went from being innovative and creating high margin products and services, actually manufacturing stuff, to diversified in businesses that were too risky, and then playing, basically a parasite to the large federal government with government subsidies, government contracts, all those things. And it's just snowballed now to the point where General Electric, their market cap, it used to be, I think, $400 billion about 10 years ago. I think in like 2010, maybe it was $400 billion. It was a really high market cap, and now it's down to $78.81 billion. The share price in November and December was 13, and then it crashed on that news down to almost a 6 at $6.45. It bounced around there for a little bit. They brought in a new CEO, and the new CEO was like, we're going to sell assets, we're going to fix the balance sheet, the normal stuff. But they still had too much debt. I was worried about them, but a lot of people were convinced in their turnaround. If you go to the Seeking Alpha website, up until the last couple days on articles on Seeking Alpha, you'll see a good amount of articles saying that they were optimistic the turnaround would happen. I was nowhere near as optimistic considering how much debt they had. And I knew being here in Washington, D.C. metro area, and here I had actually met some management team from General Electric. I went to an event in like 2009 or 10. I met some of them, and they just didn't come off as they seemed very entitled and extremely arrogant. They did not treat me with much respect. They just seemed, it was pretty bad when I met a couple of the executives in person. They were like vice presidents, and they're extremely cocky. I think one of them might have been an upper executive. So I think General Electric is a mess, and it's like the case. This is going to be a case study, guys, in business books for what happens when a good company starts to get stodgy and complacent and makes bad acquisitions with debt and, does all these share buybacks with debt. And then they start getting into accounting fraud to make sure that they can handle the debt, all these things. And they've done a lot. General Electric has done a lot of bad acquisitions for the last couple decades. It wasn't just one acquisition. It seems to be, based on what I heard Harry Markopolos say, a string of bad acquisitions. So they acquired the oil service company, Baker Hughes, and it looks like that's going to be like a write-off for like $20 billion. And then they acquired an insurance company for I think almost $10 billion. 24 years, the books have been cooked. Yeah, but I think, Gia, that it's gotten progressively worse. I think the books being cooked have gotten progressively worse. Francine McKenna would know. I may want to have her back on, because if you go back into the archives, if you're new to my channel, and you go back into the archives and you listen to the Francine McKenna interview, she actually brings up General Electric. She said most people don't read the fine print in financial statements, and that's exactly where General Electric, their lawyers, buried the information that they had been fined by the SEC for accounting fraud in the past. Many years. Every year, basically, for years now. I haven't looked at the exact number of negative yielding bonds, but it would not surprise me. Someone asked, how can all the foreign bonds go inverted yield curve when my thesis is that flight capital is coming here to the US? And the answer is that I think a lot of other central banks, besides the larger ones, are also doing quantitative easing. So it's a combination, if you're an emerging market, of flight capital leaving that country, coming to the US, and then those central banks coming in and doing rate cuts or going to Japanification and trying to intervene in the bond markets and creating artificial demand for the bonds and doing versions of QE, bond buying programs. We'll see what the CEO of General Electric decides to do here. What's going to happen now is that Harry Markopolos, and he has a good track record, guys, of fraud. So there's people now that are attacking the messenger, saying that, oh, he aligned with the hedge fund. There was an article that came out on Seeking Alpha a couple days ago saying that there was big options activity in GE puts. So it looks like that was whichever hedge fund bought those puts was the one that paid for Harry Markopolos' research reports. But he has a good track record for discovering fraud. But I think what's going to happen now is that once that information hits, once more people read the report, the 175-page report, you're going to have these hedge funds, either they're going to have people in-house analysts or CPAs or certified fraud examiners. They're either going to hire consultants or they're going to have analysts on staff, and they're going to start going through the book, seeing if the allegations that Harry Markopolos and his certified fraud examiners have made is true. So the vultures are going to start circling. We'll see what happens. The management team, though, at General Electric is going to be in very heavy spin mode. I think the chief financial officer just quit, which is another red flag. but the CEO of General Electric just bought $3 million in stock on a couple days ago on Tuesday. So maybe the CEO, because there is a lot of these billion dollar companies can hire security staff and private investigators, so they may have gotten wind, or maybe someone in the government leaked to General Electric. This happens a lot if it's a large corporation, that someone inside the federal government who got a copy of the report leaked it to General Electric that the bombshell was about to drop today on Thursday with the report. And so the CEO, they were deciding how they were going to handle this fallout, the marketing, the PR, and the CEO decided that he would buy a lot of shares. So that could be a fake trap. But the vultures are going to be circling the company itself. Oh boy, the company itself, they have some resources still. They still have a $78 billion market cap, but I don't know how they're going to be able to tell people it's not fraud, because now that the report is out and it's public, people are going to start like delving into this thing. But what the management team can do, the shares are still at 8. The shares are not below 5. So as I've said before, an old storied stock like General Electric, it's not a dividend stock anymore because it's only paying a 0.44% dividend yield. So some mutual funds and pension funds that focus on dividend stocks are not going to be holding that stock anymore. But other mutual funds and pension funds, if those shares get to $5 or less, they're going to be required by their bylaw to dump the shares. So General Electric is well aware of this. They will do whatever they can to buy themselves time and try to prevent the shares from dropping to 5. I don't know if we'll see General Electric attempt the reverse stock splits. Sometimes a lot of these large companies don't like to do that outside of the mining industry, but that is one way that they could delay bankruptcy, is by doing a reverse stock split and in diluting. So we'll see if they try that. I know the mining companies love to do that. You don't necessarily see that quite as much with a lot of the other companies in the other industries. Could General Electric's fraud be bigger than Enron? It might. It might. But General Electric, the main problem with General Electric, in my opinion, yes, there's accounting fraud. The main problem is they also have cash flow. The main problem, the whole thing was not a fraud. The main problem with General Electric is debt. Okay, it was they used debt, leverage buyouts for bad acquisitions. They've done a lot of bad acquisitions that get written down, that never pan out. And then the other problem is General Electric has done, I don't have the exact number in front of me, but they've done tens of billions of dollars in share buybacks with debt. And this is where you get in trouble. They did not, the management teams of the past, I think the CEO, the previous CEO, the new CEO inherited a really bad situation. I don't know what he's going to do to try to fix things, if he can fix things, or if he's going to jump ship or what. It looks like him buying that stock, he's trying to make it like, look, there is no accounting fraud. I just bought $3 million worth of stock on the open market. But the previous CEO, Jeff Immelt, that guy looks like the one who is doing a lot of the fraud, in my opinion. That's why his picture is up there on the screen that you guys can see. And I think a lot of the books also started with Jack Welch, but things have progressively accelerated and gotten larger. The fraud has gotten larger. The waste has gotten larger. And the debt, ultimately what dooms a company is that their revenues fall. When you have debt, the debt is fixed, and then your revenues fall, and then you're in trouble. And that, basically, General Electric was in trouble in November and December last year. And a lot of people forgot about it for a while because the shares dropped and then they rallied from like 6-something up to 10-something. And a lot of people forgot about it. But I was warning people that you should not forget about it. It was only a matter of time. I did not think that they were out of the woods. Other people thought that they would be out of the woods. I did not think so. Because General Electric does not have, they're not the market leader in a lot of businesses and industries. They're not generating enormous amounts of free cash flow. They don't have a great moat. Hey, thank you, Eric, for the $5 super chat. Yeah, so in general, a lot of large American corporations do use very aggressive accounting, and depending upon which analyst or CPA or hedge fund manager who's an accounting wizard you talk to, you'll get different opinions, just like talking to doctors with a different opinion on an x-ray or an MRI, or talking to lawyers, different opinions on a case. If you ask 10 lawyers about a case, though, you'll get 10 different. If you talk to 10 bleh, if you ask 10 different lawyers an opinion of a case, you'll get 10 different opinions. And I feel that that's the same way for what's accounting fraud. Because I've spoken with hedge fund managers about what is accounting fraud in the past, and I've gotten totally different answers from some. And including ones like Kevin Duffy, who go out of who go out of their way just to short frauds. And he said in the past, if you go back through the archives on my channel, I've interviewed Kevin Duffy of Bearing Asset Management a lot. He shorted a lot in 2007, 8, 9, and he made a killing. They bought puts. So the regular shorts were not canceled out by the investment banks. But he has said that a lot of American companies, they push it to the line. They're in the gray area, but they're not technically committing accounting fraud. He said it's very, very aggressive accounting now for a lot of publicly traded companies, but it's technically not accounting fraud. Harry Markopolos thinks that this could unravel in 3 or 4 months. I'm not so sure. We'll see. General Electric has a lot of government contracts. They have a lot of lobbyists here in DC. So there are, maybe they could pick up, like, if there was, with the Democrats in controlling Congress, there's more of a possibility for them to get some government bailout or government contract or something. Because I view them now as a Democrat-controlled company, because they are very focused on alternative energy with their windmills and some of their other projects. They were very big into wind farms and other things. That was one of their main subsidies that they were getting. Which black swan comes first, General Electric or Deutsche Bank? My educated guess would be Deutsche Bank. The charts of the European banks are much worse. Raoul Pal on his Twitter has been showing good technical analysis and charts of the European banking stock index, and that looks like it's about to collapse. But if Deutsche Bank shares go down to zero, like I said, there's a way around that for the European Central Bank and the Federal Reserve, where the central banks would guarantee the derivatives, but Deutsche Bank shares go to zero. So they may come up with some type of scheme there where the derivatives of Deutsche Bank are at least either partially guaranteed or something like that, and that calms the system even if shares of Deutsche Bank go to zero. I think this GE thing could play out it could take probably longer than 6 months, because there's going to be a bunch of people saying, oh, GE has all these businesses still, GE has all this revenue and cash flow, the whole thing can't be a fraud, there's assets that they could sell, there's employees that they could fire. So I think this thing could play out. It could take longer. I mean, General Electric already bought themselves almost a year. So when their credit got downgraded and they did asset sales, they already bought themselves almost a year longer than I thought they could. I thought they were in big, big trouble after the credit downgrade, because I was looking at the balance sheet, I was looking at the financial statements and the stuff, and I was like, they have way too much debt. So they've already figured out how to buy themselves about a year. I wouldn't be shocked if they bought themselves another 6 to 12 months. Michael, exactly. General Electric is a military contractor. They have a ton of government contracts. Tons. I tried looking through their annual report, I think in November, December, when General Electric had the problems, and it's immensely long. There's a lot of confusing stuff in there. Some of the stuff is even more confusing than the stuff you look in a bank, the banks list. It's a mess of a conglomerate with their hands in many pies. GE Capital was a disaster. I think what they sold it or spun it off. GE Capital, if they still held it, would have taken down the whole company. That's how much derivative stuff and bad loans and bad bets were in GE Capital. So it'll be interesting to see what happens to GE soon. Harry Markopolos, if you watch, I recommend watching the Harry Markopolos interview on Yahoo Finance. It was 14 minutes long. I watched that one. And I really didn't like the questions that a lot of the journalists were asking because they seemed to hint that he was going to get paid a lot of money from the hedge fund to release that research report. And he said, I'm trying to do a good job as a good concerned citizen that doesn't want accounting fraud. And that he was going to get a large whistleblower payoff many years from now from the SEC. But Harry Markopolos said that his firm with certified fraud examiners, they are investigating other corporations and they will have research reports out on a number of other corporations as well. Fed will step in on the quiet. I don't know if the Fed wants to start getting involved in individual companies. That looks bad. I think, Adam, it's more likely that the Federal Reserve would buy the collateralized loan obligations, like I said. I reread that article again, and in that CLO article, the one from the Federal Reserve website that Danielle DiMartino Booth just retweeted on her Twitter, so hopefully I'll get a lot more Twitter followers. But inside that article for CLOs, it says that the CLOs were actually not even made in the United States, that they were, according to the Federal Reserve's own research, the CLOs were made in offshore in the Caribbean. That's weird. So the sausage, this toxic derivative sausage that's being made is not intentionally not even being made in the U.S. It's being made in the Caribbean, which is even weirder. The whole thing is, I can't believe that research report was public. Let me just put it that way. That thing was weird. Some of the stuff in there. Normally, Wall Street handled that stuff. Remember when Wall Street made the mortgage-backed securities? They brought in literally rocket scientists, people with PhDs, and it was all done in-house. Yeah, read the Federal Reserve article that I have in the live stream from earlier today. Take a look at that. They have a chart. They have a weird cycle chart where the stuff that Wall Street and the others send the bad loans, the covenant-like junk bond debt to the Caribbean, and then it gets recycled out, and then Japanese banks buy it, European banks buy it, and American insurance companies and pension funds buy it. I don't know exactly where in the Caribbean. I don't know if they went into exact details. There was a number of sources cited at the bottom of the report. I don't want to. That's for a hedge fund manager or someone who wants to go. This is not financial advice. Someone who wants to go start shorting some of these insurance companies that bought this crap, the CLO crap, because those CLOs. Whichever insurance companies bought a lot of that, those ones will probably blow up and need bailouts. This is just my opinion, not financial advice. If you want to look for a short, go and find which insurance companies bought the most of that CLO. And CLOs, and those are the ones that are in a lot of trouble. So when the bond market does blow up, those insurance companies are in big, big trouble, and they will need bailouts. Yeah, but why would a Federal Reserve research paper talk about it being sent to the Caribbean and offshore shell company? The whole thing, you wouldn't think the Fed would put that out there in public. You'd think that they would keep that internal. They wouldn't want someone like me finding that and then telling all my listeners here and my 90-plus Patreon account contributors, cheap plug, that I found this stuff. Watch this, guys. In a week from now, that report and the document are gone. The story hits zero hedge tomorrow or the next day, and then the report is gone after that. Watch this. Rob says, storm clouds are overhead. It's going to be bad in the financial markets this fall. Yeah, the next 6 to 12 months are bad. It's just about, I'm not trying to pick exactly where the next crisis occurs. If you're managing money, a lot of people are doing that. They're trying to pick where the collapse starts. Whether it's European banks, European government bonds, China, emerging markets, U.S. corporate bond markets. Oh, and I wanted to talk about corporate bond market. So the corporate bond market is a lot bigger. You have the CLOs. You have the example of GE. Danielle DiMartino Booth brought up how I guess she spoke off the record to some Federal Reserve people and also the credit ratings agency people that once General Electric was downgraded in, what was it, November, December, all hell broke loose. All hell absolutely broke loose in the corporate bond market and the junk bond market, and there was a total credit freeze. There was no new corporate bond or junk bond issuances, I think, for at least 2 weeks. And the Fed got spooked. Jerome Powell did his last rate hike, and then there was the Christmas Eve emergency meeting that Steve Mnuchin sent out the press release, including the plunge protection team in there. Remember how ridiculous that was? And then we had that was one emergency meeting that we know about, and then there was the second emergency meeting that TheStreet.com reported was at the end of May. So they're probably, the corporate bond market in the U.S. and the junk bond debt and the CLO stuff is so bad that there's probably, we know of 2 emergency meetings now since Christmas Eve between like the Fed, the banking regulators, the Treasury Department, the FDIC, all those guys, and the plunge protection team mentioned in there. So those are emergency meetings. And then my educated guess is that we know about 2 emergency meetings, but I think there's probably more. My educated guess now at this point, knowing how a lot of these government employees act, because I've been here for 20 years, about 20 years now, is that there's probably now emergency meetings about the CLO market with the Federal Reserve research paper, the corporate bond market, the junk bond market. There's probably emergency meetings now at least once a month, maybe even once per week. Hey Tino, maybe some of those are some. Actually, Fidelity is mostly stock brokerage, aren't they? How much insurance do they have? I didn't even know they have much insurance. I mean, all their television commercials are just like they have a low cost asset management company. I didn't even know they did much insurance. Just like I didn't know General Electric did much insurance. General Electric bought a long-term healthcare insurance company, and they were collecting premiums, and they were not keeping adequate reserves. So basically, guys, not only is the allegations that Harry Markopolos is making that General Electric committed extensive accounting fraud, but also that they committed egregious insurance fraud. Because General Electric, they collected premiums from people paying the long-term care health insurance, and then they didn't set aside reserves. They didn't set aside the required number of reserves. Yeah, Deutsche Bank is, the shares are falling. The key number there is 5. For a large cap stock, when it gets to 5, that's around the level that the mutual funds and the pension funds dump. So we may see Deutsche Bank then do a reverse stock split. We'll see if they do it or not. But if Deutsche Bank gets below 5, that by the bylaws contractually, it forces a lot of mutual funds and pension funds to do forced selling. They cannot hold a stock that is below $5 per share. Some of these pension funds and mutual funds. I think the accounting fraud at General Electric, Gia, she says 24 years of cookbooks. I think it's gotten progressively worse. Especially with the bad acquisitions with the television station, Universal Movie Studios, all these things, loading up on debt for share buybacks, bad leverage buyouts. When you add all these things up, that's just a lot of misallocation of capital, and the problem was the debt. And the debt is why they do the accounting fraud. Because people, if you have good enough cash flow and good enough earnings and some revenue growth, if your revenues aren't dropping, a lot of people don't worry about the debt. They say, oh, you can manage the debt. Oh, your leverage ratios are fine. Oh, we don't need to downgrade your credit. And that's how corporations get away with things for so long. But the debt is what did them in. The debt is what caused all the other problems. A smart corporation should not want to carry a lot of debt on their balance sheet. It should be used strategically. You pay off the debt, you have a clean balance sheet. There's a lot of companies that do that. Use very, very little debt. Or it's used strategically for an acquisition, and then all the debt's paid off, and you have a clean balance sheet. Then you have your cash flow, use the debt strategically. But that's not the way corporate finance is done anymore. Most corporations don't do that. Eric Lamboza says the existence of the Federal Reserve, is illegal in the first place. They will implement communist bailout policies and blame it on capitalism. I 100% agree. Yep, they have it set up now so heads we win, tails you lose. There's a bunch of mining stock questions here. Honestly, I'm tired, and I only have one super chat, so I think that's it for now. This was just going to be an update on General Electric, and I'll attach links to the General Electric articles. Under Jeff Immelt, General Electric decided to focus on the power sector, but that seems to have meant reducing quality and expenses to increase profit. They've had some serious quality issues. I think their profits were not real. I think it was all they went after subsidies and government contracts. So they got tons of government subsidies, and then they got tons of government contracts, and it wasn't new products and services generating free cash flow and high margins, or what value investors would call a moat. Okay, guys, well, my voice is going. That's 2 streams and almost 2 hours worth of talking. I'm going to go take a break. It's time to go lift some weights and relax. Okay, everyone, have a great night, and we'll see what happens. We've had tons of news lately. We'll see what happens, and if there is more news, I may jump on another stream then tomorrow or the next day. We'll see. Bye.